the rules don't work. Who did do well? And you go back and you go, okay, well, the guys that did well were the big boys, right? The institutions. And you go, okay, well, if they did well, what did they do that I didn't do? Well, they invested a significant part of their portfolio in alternative investments.
Hey, what's up? This is Brett Snodgrass with another episode of the Iron Deep podcast. Got Benjamin Carmona on the podcast with me today. What's going on, Ben?
Hey, Brett. Good to see you. Great to be here. Thank you for the opportunity.
Yeah, definitely, man. I'm excited for the show. So Benjamin is from Southern California. He's been in California for several years for his life, and he is a partner at Perch Wealth, and so he's in the investment space for the past 20 years. One of the top guys. We're going to talk about 1031 exchanges a little bit today. So stay tuned for that. If you're interested in 1031 exchanges or DSTs, I'm not going to say out the whole word, but maybe you're interested in what a DST is. Helping investors basically, step out of active real estate more into passive, purposeful legacy impact. And I think I'm in that stage. I think a lot of our listeners are in that stage too right now. We're starting to be like, man, this active real estate business, I've been doing this 18 years and yeah, it's a lot. I think it's played a toll on some of us, and we're like, hey, how can I step more into passive? So excited to dive into that. But Ben, I want to, this is the Iron Deep show. So sometimes we ask some deeper questions, but I just want to hear a little bit about your personal story. Maybe your personal story of wealth. Kind of take us back and maybe share some experience that maybe shaped how you feel about money, freedom. Like what started to spur you on with this whole strategy and wealth?
Sure. I warned you on the front end, Brett. I'm an open book, and hopefully this comes out. Look, that's a great question, and I'll just tell you that I was raised. I love my parents; they're amazing. But I was raised in a situation where kind of money was the end all, be all, and which is not the case. But it created a lot of challenges for me. It shaped me to who I am today. Thankfully, I would say that that type of idolization or philosophy I've shifted away from several years ago. But at its core, that's what's driven me to who I am and where I am today.
Yeah. Can I ask you a few questions on that? So you say your home life, they idolized, or it was kind of the end all be all. Were your parents were they rich? Were they wealthy? Or were they?
I would say they're upper middle class.
Yeah.
And very frugal, but it was all about success and performance and money and doing more and more and more. And I hope my dad doesn't see this, but if he does, like I even had conversations, even to this day, my dad is an awesome guy. 72 years old. He didn't need to worry about money anymore, but he still is. And I say, Dad, why do you care? What does it matter? The money is nothing. You've done great. It should not be anything for you anymore. But it is. If that, so it's a, yeah, I don't know if that.
Yeah.
That's right.
Do you find that maybe that there is no stopping because of just the identity wrapped in that, like, hey, if I'm not this, then I don't know. Yeah, I don't know what I am, or I don't know what to do.
100%. It's part of my identity.
Right.
Because, right, it's part of my identity. I mean, and I don't like that. And I know it and I realize it, but it's still hard to even let go, because if you build this identity and, whether the expressions were the harder you work, the luckier you get, or treat this paycheck as if it's your last,
Hmm.
or a million different things. It was a sense of fear that still sits in me today, about uh, needing to have money and needing more. And it's unfortunate. It screwed me up in a lot of ways.
Hmm.
It still, screws me up in a lot of ways, but I'm aware of it now, and I'm working toward. I know it's not something that should be idolized. It's not the route to happiness. And that's one of my challenges today, is balancing family and work based on where I came from, right?
Mhm.
You're the provider, you are the moneymaker, you do not fail. That is what you're about. And so I've done that to some extent. But I know that that's not right. And it's about family and being there for your kids and your wife. And so it's kind of a tough situation that I
Yeah. Yeah.
work through.
Yeah. Now I work with a lot of men. I hang out with a lot of men. We all just that is a an ever yeah, it just seems like it's just a battle that we all face. So we're all pushing and success and performance, and then like, and sometimes we don't know why. We're like, man, why do I keep pushing? Why do I keep doing? I know, I don't have to, right? At the end of the day, and but something keeps us pushing. And I think a lot of it, I think you mentioned, is just fear. That is funny. I was talking to the guy the other day, and he's getting ready to start a business, and I think I was just talking about, like, um, it doesn't matter how much money you have, like the fear never really goes away, because then you're just kind of scared to lose it all. Like, oh, you think something's gonna happen, and you're just gonna waste it, and just all gonna be gone. I don't know. Like, and for some reason that just sits there sometimes. Right. Would you?
Yeah, there's no doubt. And part of it, I don't know about for you, or everybody has their individual story, but for me, I've always worked really hard, and my hard work has translated to success.
Mhm.
And that's the one thing that I know that I can succeed in and feel good about day in and day out. I know if I do this, it translates to X. It's not always that straight shot with family or your kids or
Right.
friends. And I know that's a problem for me, because it's a crutch, it's an addiction, if you will,
Hmm.
because it is that safe place.
Yeah. Yeah.
You got to trust in God, right? And that's what I want to, is that believe that you don't need to work yourself to death, to get this success. You need to be good and take care of what's most important, and success will be given or come to you.
Yeah.
I have not perfected it by any means, but I believe it. I just need
Yeah.
to act on it.
Yeah, yeah. No, I definitely agree. Sometimes, yeah, it's like it. Sometimes we look at it's more of a linear, like, oh yeah, if I do this, then I can be successful. I can be recognized. I can feel good about myself. But all the relationships, you talk about family, your wife, your kids, all your friends, the relationships are just messy, and it just doesn't. You could, you know, you could be the best dad in the world and do all the bullet points and do the outline and read all the best dad books, and your kids just end up messed up, and you're like, man.
Right. Exactly right. Amen. You said it.
So no, man. Well, thanks for sharing. So a lot of our listeners, again, are real estate guys, and we're kind of entering in that season. I'm 45, so we're probably 40s, 50s, 60s listeners, and some of them are getting, I might maybe call them worn down landlords, or tired active real estate investors, entrepreneurs, and that's just kind of who we're talking to right now. So can you talk to us about maybe some of the strategies? Maybe it's a DST, maybe it's a 1031 exchange. But if I came to you and I'm like, man, so I'll just tell you personally, right? So hey, I'm Benjamin, I'm Brett Snodgrass, and I'm in Indianapolis, Indiana. We do about 15 flips a month. I got a small team of about 10 people locally, and then I work with virtual assistants. So I got about 20 people overall, got about 80 rentals. We do a lot of seller financing. So we got, a few $1 million there coming in, as far as the notes and stuff. So what should I do? But I'm tired, man.
I,
I'm tired.
I would say at 45, first of all, you look great. You don't look tired, and then our mentors, our parents would say, "Give me a break, Brett. You're
Yeah,
45.
right.
I'm 70 and I'm still running hard." So I didn't want to hear about that.
That's
But
true.
uh,
It's funny
um,
because my dad, he was a high school basketball coach and he retired at 49. And I was thinking about that, like, man, dad retired. He retired early. Anyways, that's a long story.
yeah,
He didn't retire from
yeah.
working. He still was a teacher, but anyways, go on.
Yeah, yeah, no, no. Look, and before I even get into the exchanges, like that's a big thing today, and I'll say that our clients are my clients are really baby boomers and seniors, so older demographics that have worked their tails off all their life, that have been through many different ups and downs. And now they're at a stage in their life where they are not 45, they're 65 and
Mhm.
older and whatnot. And they are tired. They're tired of the volatility. They're tired of managing real estate. They don't want one more call from their tenant, right? Hearing about toilets, tenants, trash, termites,
Right.
whatever you call them.
Yeah.
And they're sitting out there thinking, okay, well, in 2008, 2009, I thought I didn't know if I was going to ever be able to recover, right?
True.
And here we are, how many years later, 15, 16
Mhm.
years later, everybody, for the most part, is recovered. Real estate's up, stocks are up, bonds, I know they've gone down, but for the most part, relative to that time, they're up. And they're thinking, um, um, how do I avoid 2008, 2009, right? Because you don't know what you don't know. There's a
Mhm.
lot of stuff going on in the world right now. What can I do to kind of further diversify my portfolio, further, increase passive income stream? How do I divest of the real estate that I love and manage for all my life, but I hate right now because it takes my time and energy? And those are the folks that we cater to,
Mhm.
broadly speaking. Um, and I'll tell you just two things, and then I'll stop. For the going back to 2008, 2009, if you look at really the traditional portfolio model was broken, right? The old 60-40 stocks, bonds, a little bit of cash. It broke because the folks that did everything right, they followed the rules, they followed the specialists, they still got hammered.
Mm.
And then
Mhm.
you think, okay, well, if I got hammered and the code or the rules don't work, who did do well?
Mhm.
And you go back and you go, okay, well, the guys that did well were the big boys, right? The institutions.
Mhm.
And you go, okay, well, if they did well, what did they do that I didn't do? Well,
Mhm.
they invested a significant part of their portfolio in alternative investments. What are alternative investments? Those are anything outside of your traditional stocks, bonds, mutual funds, and insurance. Typically, they're a private real estate, equity and debt deals, oil and gas, mineral rights, just a variety of different investments that are not exchange traded. Um, and so they prove themselves then, they've proved themselves historically. And so that's one of the things that we're big on today is helping investors diversify. If you're over allocated in stocks and bonds and mutual funds, what else can you do to protect yourself? There are funds.
Mhm.
The
Mhm.
other thing, and then I'll stop, is we're big at 1031 exchanges. Real briefly for the real estate folks know this, but a 1031 exchange, it's been in the IRS or it's been in the tax code for over 100 years. It allows investment property owners to defer paying taxes on gains associated with the sale of that property, as long as you exchange those proceeds into other investment property. You see like kind property. So you can exchange, you can sell land and go into a multifamily. You can sell multifamily and buy a hotel, as long as the intent is for investment purposes.
Mm.
And so on the that's 1031 exchange. It's arguably the most powerful tax code out there in terms of wealth building and accumulation and preservation. But then your traditional 1031 exchange, Brett, if you sell one of your 40 or your rentals and you buy another, 40 or 20 or whatever to defer the taxes, that doesn't get you out of being tired every day, right?
Right. That's
Selling
true.
one, yeah, and you're going into something else you gotta have to
Yeah.
manage, right?
Right. Yeah. You're just going
What,
then, yeah, one swapping one out for the other. So yeah.
100%. And so what we offer, these Delaware statutory trusts, which I can dig into, and other 1031 eligible vehicles or structures, provide a turnkey passive 1031 solution. So for the 65, 70, 80, 50, it doesn't matter wherever you are in life, you can sell your property, exchange into one or more other properties that are professionally managed for you. They pay out monthly income. They send out quarterly reports and performance reports. You'll get your end of your tax statements that you can hand to your CPA. 100% passive. And without diving further into the exchange process, the IRS has blessed us with the opportunity to defer taxes, but of course they don't make it easy. And so there are rules and guidelines and timelines that you need to follow. So it's not always easy. And I'll stop there. I'll give more of a description if you're interested.
Yeah, definitely. So the Delaware, the DSTs, I think, a lot of our audience knows 1031 exchange, right? I mean, you buy a property or you have a business, and you're going to make a lot of capital gains tax, right? And you're going to sell it. You're going to have to recapture all this tax, and 1031 can defer that, but you have to buy another asset within a certain amount of time. Typically it's 45 days, or you have to locate it in 45 days and then
Correct.
close it in, 180 days, something like that. But the DST, like I'm even unfamiliar with a little bit more. So like, can you dive into that? I mean, is this like a crowdfunding thing or a REIT thing, or what is that?
Yeah, that's a great question. Kind of. So, Delaware statutory trusts were created in the 80s. They weren't set up for 1031 purposes at that time, but it's a trust or an entity whereby you have one trustee that manages the trust on behalf of up to 499 beneficial owners. So when you apply this trust around real estate, it creates a fractionalized ownership situation. And in 2004, the IRS came out and actually validated this fractionalized ownership structure as real property ownership and therefore eligible to satisfy 1031 exchanges. So it's been in the code for almost 22 years now. And the difference between like a crowdfunding, when you go on a crowdfunding, you can invest cash in XYZ opportunity on a fractionalized basis, but you're not investing, you can't utilize that for 1031 purposes. It has to be real property ownership to satisfy. And so the DSTs cover, check that box.
Okay.
Yeah. And let me just give you an example because a DST, and I'm gonna the sponsor companies or syndicators for DSTs, and I'm just throwing out some big names. There's a bunch of folks in here, but your audience will, whether it be Apollo or Starwood or Invesco or Ares or Cantor Fitzgerald, these are the type of institutions that are involved in this space, among many others. And so these folks essentially utilize their relationships, their capitalization, their expertise to buy institutional quality real estate. It may be a $100 million, 400 unit multifamily in Dallas, Texas. It may be $100 million or $50 million life science property in Minneapolis, Minnesota, or self-storage in Raleigh, North Carolina, so on and so forth. So you have these big real estate companies go out, they buy these properties. The properties are owned, they're stabilized, they're income producing, and they turn around and they offer everyday investors, our parents, perhaps you, if you're so
Mhm.
tired,
Mhm.
um,
Yeah.
to sell their property, do a
Mhm.
1031 exchange. Don't worry about the rules and regulations. You have a multitude of options in front of you. And just going back to the up to 499 investors, the minimums are, for the most part, 100 to $250,000 each. So think about Mrs. Smith. She sells a $2 million duplex here in Orange County. I can take Mrs. Smith's 2 million out of one property in one little location, and I can spread it out 10 different ways if I wanted to
Mm.
mitigate risk, diversification by sector, by geography, more
Mhm.
times than not increase your income. And most importantly to our clients is there's no more getting calls from tenants.
Yeah.
And it gives them the freedom and flexibility to spend time with their grandkids, live their life, and not have to worry about it.
Yeah. So really it takes a lot of the 1031. Instead of putting all your eggs into one asset, one property, you can spread it out and takes the management off your plate. So,
Exactly right.
and you so you get a lot of the benefits. That's awesome. That's great. Yeah. Yeah. Cause that is kind of stressful too. Like, that the 1031, you're on this time limit. You're like, oh, I got to find this other asset to pour this big gain into. And then that can be just an urgent, just difficult situation. So,
Hundred
um,
percent. I
I
mean,
love
when
that.
you're facing whatever the two, three, 500, $1 million tax bill, it's concerning.
Yeah.
Pressure.
Yeah, no, definitely. So it sounds like, you're working with a lot of the baby boomers, people in this transition. Um, what are some of the human behavior like just behind that? What are some of their feelings, some of their thoughts, like someone coming to you and into that age? You mentioned tired, but is there any other thing that kind of comes to mind when you're working with people in this demographic? Can you talk about that a little bit?
Yeah,
Yeah.
yeah, for sure. I mean, the biggest hurdle, and like you, and you don't feel bad, not that you did, not knowing about DSTs, because 95% of every single sophisticated real estate investor, CPA attorney, they really don't have any idea that they exist either.
Mm.
So with that in mind, again, think about, even you've built this real estate business, you have these properties. Um, our clients have built their businesses and built their wealth through through uh, through their with their own hands,
Yeah.
right? And to think about handing over the controls
Yeah.
to some foreign agent, right? Regardless of how big they are,
Right. It is
is
scary.
is is very, very difficult.
Yeah.
And I totally sympathize. And so that's the that just comes to mind. You brought that up, Brett. It's a sense of, it's such a big change.
Mm.
It's so concerning, and very difficult for some of our investors to get their arms around.
Yeah. Yeah. Because I'm picturing people, yeah, just building their business with, mom and pop businesses in it every day for, 30, 40 years and always having control. Right. And I even we all struggle with that. Even in there, even when I'm running a business now, I had a conversation with one of my employees today and I've been doing something in the business, but I'm getting ready to hand that over. And yeah, it's a scary feeling. Anytime you give over that control to somebody else, you don't know how it's going to
Yeah,
go. There's a lot of uncertainty there,
yeah.
especially if it's like your lifetime, you know,
That's what I was
wealth
going
or
to
you.
say. Yeah, I mean, this is like the biggest part of their overall net worth. How
Yeah,
scary could that be? You've worked all
yeah,
your life, so that's legit.
yeah. That's awesome. I got a few questions here. Just going back to some of the deeper questions. So obviously you're offering, DSTs, 1031 exchanges, investments, and you're talking to people about that. But talk about this earlier in the show. Is just how do we help people's hearts continue to be aligned with the things that really, really matter? Not just helping people get richer, but actually live freer. And I
Yeah,
think we talked a little bit about that. Like again, there's no amount of money that can cause even myself, like, not to maybe have fear, not to have anxiety, or not to have worry. And so I still see people, like very, very wealthy people, they just live very trapped, I guess is maybe the right word.
Yeah, yeah. I
So
mean, I mean, it is, it's a amazing question. It's a question I haven't, figured out myself. So, so I'll take that with, um, um, you know, uh, I don't want to go on a diatribe, but I will say, for what it's worth, and I love your feedback. I've been in the business for 20 years. And we didn't even go to my background. I won't even kind of go into it, Frank. But over my 20 years in this business, at a fairly early on, I the morals and ethics and greed, morals and ethics, I feel like have gone out the door.
hmm,
Greed has gone through the roof. Um, it's been so one of the hardest things for me to see
hmm,
happen, to experience betrayals over money or this, and I'd say, it's still very hard for me today, and I just try to do the best that I can to always do what's right regardless of the consequences, to me, good
hmm,
or bad. You do what's right. And so back to your question, like, what are you talking about then?
hmm,
um, I don't know how you swing that pendulum, because I feel like if people, if I feel like our parents and the great generation, it wasn't always like it wasn't like that. It's different people, and how do we get back to family values, right?
hmm.
Religion, God, that I think would solve. Maybe not, but I don't know how you get there. I know the pendulum always swings. Hopefully, it's swinging back now. But I feel, personally, I feel like there needs to be a catalyst to get us back there, so that there's more appreciation for and gratitude just for every day.
Yeah. No, I love that. I love that. That's a good answer. And um yeah, I was just sitting on my back patio. So I today, and sometimes I work outside because it's so beautiful. I mean, you're beautiful all the time in Southern California. Indiana, we don't get beauty all the time, but it was a beautiful day today, and I was just kind of reflecting on that. And I go through seasons of pushing and stress, right, and anxiety, uh and when I'm in the middle of it, I don't quite understand. But today I was just reflecting on, yeah, just the gratefulness. And like, I don't know if I want to live on the next 5 years, 10 years, 15 years of just pushing so hard. I just want to enjoy the day. I want to enjoy my wife. I want to enjoy, um and I don't
Mhm.
have to, yeah, push as much. Anyways, there's some reflections I haven't figured out either. And so, like, so,
Yeah.
and but these are some reflections that I have. You obviously, do you have kind of a why behind you? I mean, you're helping transition people into in this new season of life with these new tools. I mean, is there something that, I mean, you talked a little bit about it earlier in your earlier life, right? But maybe even now today, like, do you have a purpose behind, even this business? Maybe is there something that's it's even stirring up um a new hunger, a new purpose? Is like, man, this is good. This
Yeah.
is really good. Why I do this.
Yeah, again, I'm still figuring things out, but I'll tell you, I know the purpose, and I mentioned it kind of on the front end, is I, and in line with what I just said, being involved in these on the corporate side and dealing with the politics and the greed and the betrayal. I mean, it was just, it just drove me nuts. And then I get out, and I care about people, and you see so many investors being just totally hung out to dry,
Hmm.
through bad advice, through people that don't care, or even if they do care, they don't really know what to do.
Hmm.
So it was, yeah, the path and the reason that I started Perch Well, um, and perch is symbolic, right? I mean, I have people go, "Well, why'd you name your company after a fish?" It's not a fish. It's perch. A higher, an elevated view, a higher ethical, moral standing, and a better understanding of the market itself. But I do know that I love to help people, and that's what I've set out to do. So helping people, whether it be in business or anything that I do, I try to help people
Mm-hmm.
every day, all day. Um, uh, Unfortunately, not everybody thinks that way, but I do. It fills me, and that's my purpose.
Yeah, no, that's awesome. Love it. All right, last couple of questions. Let's dream. Let's kind of dream together. So maybe take yourself 10 years down the road. And I know you sounds like you're working through some different things. And you're helping people transition. You're helping yourself, transition or transformation. Like what's something that you see yourself even in your life in the next 10, 15 years?
Well, I'll tell you where I'd love to be. Like you, I'm tired. I would love to be in 5 years playing pickleball 5 days a week, enjoying my family, not working as hard and stressed. I don't know if that was the basis of the question, but no, I want to slow down. I want to slow down. I want to, as I said, I think on the call, I'm aware of these things and my deficiencies or my flaws, but I feel like I need the time to actually tackle them. Now,
Yeah.
again, I don't think that's the right way you tackle them today, but that's what I would. I hope that I can get to a point where I don't have this anxiety, if you will, or need or fear-based drive to feel successful or need to make money or whatever it may be. I want that to go away, and I
Mm.
want to appreciate the moment.
Yeah. Awesome. I love it. To be present. That's cool. Benjamin, how can we support you? How can we, if we're interested in some of the vehicles and what you have to offer? Someone maybe listening in, maybe they have something they're transitioning in life. What's the best route for them to get a hold of you and possibly work with maybe a DST or a 1031 exchange or anything else? What do you guys do other things besides that, or is those your two kind of catalyst things?
No, I mean tax mitigation strategies, anything alternative investment related. If you're looking for passive income, if you're looking to mitigate taxes, if you're looking to divest from active management, those are the areas that we specialize in. And I appreciate you asking. And look, we're happy. So it's not just, I mentioned this. I have a business partner. We have 10 advisors throughout the country. So we do business nationally. If you have questions about investments or 1031 exchanges, or you're thinking about selling property in 2 years, feel free to call us. We're happy to, educate and provide some guidance. And I give out my cell phone, believe it or not, and I will get back to you. My cell phone is 818-269-4972. Our website is Perch Wealth, PERCH, wealth.com. And we'd love to speak to you. So you can find me there or anybody else on our team for that matter. They're great people.
Awesome. Well, thank you so much for being on the podcast today, Ben. Really appreciate you sharing your heart too, man. I just really appreciate that. I know our audience does too. And yeah, wish you so much success, brother.
I appreciate it. Likewise. Thank you very much.